Welcome to Skilled MBA Case Study Series in Accounting. UnityCars faced unprecedented challenges during the COVID-19 pandemic. With travel restrictions in place, they focused on cash flow forecasting and fleet optimization. By analyzing financial data, they adjusted their fleet size and expenses, ensuring liquidity. This strategic approach allowed them to maintain operations and prepare for future growth opportunities. UnityCars thrived pre-COVID by rapidly expanding in Melbourne, capturing market share with a fleet of over 100 vehicles. Their diverse offerings, from economy to premium cars, catered to various customer needs. Key revenue streams included airport pickups, corporate accounts, and tourism rentals, establishing them as an affordable, high-quality alternative to global brands. UnityCars' business model involved acquiring vehicles via high-interest loans, increasing leverage risk. Operations spanned multiple airport and business district locations, incurring fixed costs like premises, staff, and insurance. Profits depended on high vehicle utilization, with thin margins but substantial volume. Growth strategy focused on reinvesting profits into fleet expansion, assuming ongoing market growth. COVID-19's impact on Australia's rental industry was catastrophic. Travel restrictions led to a 92% drop in bookings, decimating revenue. Tourism and corporate travel vanished, and airport operations nearly stopped. Monthly revenue plunged from $285,000 to $22,500, highlighting the severe financial strain on the industry. The financial vulnerability was stark. An 87% revenue decline year over year highlighted the catastrophic drop in bookings. With 92% of the fleet idle, vehicles accrued costs without generating income. A 65% debt-to-asset ratio due to rapid expansion exposed dangerous financial risks. Despite zero revenue, fixed costs like loans, insurance, and maintenance continued to burn cash. Monthly fixed costs were unsustainable: $78,000 for vehicle loans, $25,000 for insurance, $42,000 for staff, $18,000 for premises, and $12,000 for utilities. With cash reserves dwindling, bankruptcy was imminent within 8 weeks without strategic intervention. Cash flow forecasting is crucial. We collect financial data, analyze historical patterns, and model scenarios: optimistic, realistic, and pessimistic. Break-even analysis determines the minimum fleet size and rental rates to cover costs. Weekly cash flow projections highlight inflows and outflows, revealing a 56-day window before insolvency under current conditions. Exploring strategic options. Securing additional financing can provide immediate relief, but risks increasing debt without demand recovery. Downsizing the fleet by selling underperforming vehicles generates cash but may limit future capacity. Negotiating with creditors for loan restructuring can offer short-term relief but might harm credit ratings. Pivoting the business model could open new revenue streams, yet risks diverting focus from core operations. UnityCars executed a hybrid fleet optimization strategy. In weeks 1 to 2, they identified 40% of the fleet for potential sale, focusing on older, high-maintenance vehicles. By weeks 3 to 4, they secured 6-month interest-only payments with lenders. In weeks 5 to 8, selling 35 vehicles generated $875,000, reducing monthly costs by 38%. UnityCars pivoted by repurposing vehicles for local delivery, partnering with e-commerce retailers. They secured healthcare contracts for staff transport, ensuring sanitized vehicles for essential workers. Additionally, they offered discounted long-term leases to those avoiding public transport. These strategies generated 45% of pre-COVID revenue, maintaining vehicle utilization as traditional rentals recovered. UnityCars' strategic pivots significantly impacted cash flow. The local delivery services and healthcare transportation contracts provided steady income streams. Long-term leasing options attracted new customers, ensuring consistent revenue. These initiatives, while maintaining vehicle utilization, contributed to achieving 45% of pre-COVID revenue, setting a foundation for financial recovery and adaptation. By mid-2021, UnityCars had streamlined operations, becoming more resilient. Domestic travel's return saw them capture local customers through aggressive marketing. New digital systems enhanced efficiency, reducing staffing needs. Maintaining 65% of their fleet, they achieved 82% of pre-pandemic revenue by 2022. Lower debt levels boosted profitability, emerging financially stronger. Business leaders must prioritize liquidity over growth in uncertain times, maintaining robust cash flow models. Align debt levels with business volatility to enhance survival odds. Regularly update forecasts, using multiple scenarios to guide strategic decisions. Develop adaptable business models, ensuring core assets can support diverse revenue streams when necessary. Master of Business Administration students should engage in applied learning by developing financial models to forecast cash flows under uncertainty. Study crisis management to understand leadership's impact on business trajectories. Explore strategic flexibility by examining how companies pivot assets for new revenue streams. Master risk assessment to balance growth with financial vulnerability. Thank you and explore how Skilled MBA's case study enhances practical business education. Analyze real-world examples to understand strategic decision-making, financial modeling, and crisis management. Gain insights into balancing growth and risk, and learn to pivot business strategies effectively. Connect with Skilled MBA for more in-depth analyses and insights.